Hello, everyone. Good morning, good afternoon, good evening, depending on where in the world you're joining us from. My name's Hans Kundanani. I am a Senior Research Fellow and Head of the Europe Programme at Chatham House. Welcome to this webinar on the EU's China policy. A couple of days ago, we published a paper called the EU's Unsustainable China Policy, published by my colleague Pepijn Bergson. And we're going to be discussing that paper for the next hour or so. The question we've asked is the EU's China policy sustainable? Pepijn has a clear answer to that, as the title of the paper suggests. He's going to talk for about 10 minutes about the paper and lay out the argument that he makes in it. And then we're going to have two responses to it. First of all, from my colleague Yu Jie at Chatham House and the Asia Pacific Programme at Chatham House. And then from Robert Bazadao, who is an assistant professor in international political economy at the LSE, and who works on EU trade and investment, international dispute settlement mechanisms, and international regulatory cooperation and conflict. So then hopefully we'll have at least 30 minutes, hopefully around 40 minutes to have a discussion. The way we're going to do that is if you want to ask a question or make a comment, please do that in the Q&A box. Don't use the raise hand function, and you can use the chat function if you have sort of technical questions. My colleague Sally will be monitoring that box, but if you want to ask a question, please do it in the Q&A box rather than in the chat box. If you write your questions in there, and then you can also vote up people's questions if you want to ask a similar question. And I'll keep an eye on that box and maybe group some of them together and then put those to the panelists. This discussion is on the record. It's not under the Chatham House rule. And it will be posted online later on, so you're free to quote people. And I think my colleagues are about to post a link to Pepijn's paper in the chat, so that you can look that up as well. So with that, over to you, Pepijn. Explain to us why the EU's China policy is unsustainable.
Thank you very much, Hans, and thank you to Jay and Robert for joining us, and of course to everybody else as well. So Hans, as you already said, we published a report last week on the EU's China strategy, looking particularly at the economic side of things. This was published as part of a larger project, which we're running together with the Royal United Services Institute, funded by the Carnegie Corporation of New York, in which we're trying to set up a transatlantic dialogue on China. This report was really one of the first steps within that to get a good idea of Europe's China policy, and to then start looking at areas of overlap with the US in order to really facilitate that dialogue. So what I tried to do in the report is look at how policy in response to China is made within the EU, which member states are driving this, but also examine the context in which policy is made, and the context that it attempts to respond to. And of course, in particular, the US-China rivalry and how it impacts on the room for maneuver that Europe has and has created for itself when it comes to responding to China with economic policy. So you already gave a spoiler of the title, and that I think it's largely unsustainable as is, and I'll try to explain why I think so. So to start off, I want to look a bit into how different member states' positions when it comes to China, and also look at way in which they're economically exposed to and integrated with the Chinese economy, as I think this is incredibly important if you want to understand the EU policy, as this is driven largely by the member states, of course. So if you look at data on trade flows and investment, both in Europe and in China, this doesn't really throw up many surprising results, as I think most of the people joining us today will know that European economic relations with China are largely dominated by Germany. So before the COVID-19 pandemic, the value of German goods exports to China was equal to the combined exports to China of all other EU member states. And German businesses are, on top of that, also deeply invested in the Chinese economy as well. So it's not just a case of exporting. So it's also not surprising, I think, that this is what drives a lot of the policy positions in European capitals, and in particular in Berlin, and by extension then in Brussels. So it's been this economic context that's driven a lot by Germany, and that has really formed the EU policy on China. So whereas the US, particularly, of course, under President Trump, pursued a more confrontational line, including using geo-economic tools, not least tariffs, of course, but also export restrictions of certain technology, the EU, in my view, has effectively been pursuing a more mercantilist policy when it comes to China. And I think we saw this very nicely on display sort of over the last, what is it now, 7 months with the EU-China investment agreement, which was aimed at generating further market opening in China for European firms. But I'll return to that later. So this is, I think, not to say that the EU and its member states don't share many of the same gripes that the Americans tend to have about Chinese economic practices. So to just think about the complaints around intellectual property theft, and more widely, sort of the impact of China's authoritarian capitalist model on its trading partners. On top of that, China has also moved up quite a lot on the political and economic agenda in Europe, as in part because I think it's increasingly seen by the EU as a real economic competitor and a threat. This is driven in part by the stated ambitions by the Chinese government in a lot of areas, which we have also seen sort of responses to in Germany, but also, I argue, due to European insecurities, basically, over its own lack of progress in particular economic sectors. So just think of the perceived Chinese success in the field of artificial intelligence, and Europe being very much behind in that space, notably not just behind China, but also behind the US. So when it comes to policy, the response from the EU has been to put together mainly a set of economic measures, which it sort of calls a toolbox, which are mainly defensive economic policies and instruments aimed at protecting the EU single market against this perceived negative influence of China's economic model and practices, and at the same time trying to get small concessions out of the Chinese government when it comes to market access. So that includes, for instance, an investment screening mechanism that the EU has put in place recently in response to an inflow of FDI from China, but also a host of other smaller policy initiatives, which I think we'll go into a bit later in the discussion. A more overarching strategy to that has been the EU pursuit of what it calls economic sovereignty or strategic autonomy, which are two terms that tend to get used interchangeably sometimes in these debates. So the EU defines strategic autonomy as the capacity to act autonomously when and where necessary and with partners wherever possible, while the idea of economic sovereignty basically boils down to the capacity for the EU to wield economic power on the global stage. So assuming this is achieved, strategically autonomous EU would effectively sit as something of a neutral third pillar between China and the US within the global order, at least is the way that the EU effectively sees it. That doesn't mean sort of equidistance between the two. I think it's very fair to say that the EU will remain closer to the US than it will to China in terms of its outlook and its values, and also in terms of its economic relations. At the end of the day, even Germany still makes a lot more money in the US than it does in China. But it does mean not taking sides in this rivalry. And a strategically autonomous EU would also mean attempting to benefit economically from economic integration with both of the warring partners, or arguing partners, I should say. And I think that's where we get to the real meat of the conversation, as I would argue that this is a rather risky strategy. First of all, there's the question of whether Europe is actually able to achieve this strategic autonomy or economic sovereignty, as in really all areas of importance, ranging from industrial policy to trade policy to the international role of the euro, and not least, of course, security policy, where the EU remains dependent on the US security guarantee. The EU has, to put it mildly, quite some way to go to achieving this. And actually achieving that will run up against the same kind of political hurdles that have hampered economic reform in the EU for a very long time. So think of the kind of divisions that have often plagued the EU. And then there's, of course, the simple unwillingness or political inability to expand the kind of resources in these kind of areas and within sort of the geopolitical and geoeconomic sphere that are necessary to achieve these types of stated goals, which I think stands very much in contrast to both the US and Chinese approach. Now, that wouldn't really be an issue if the context in which this all takes place was unchanged from that which the EU faced, let's say, 5 or 10 years ago, in which this sort of triangulation was effectively accepted by both sides. However, I think we're seeing sort of increasing pressure on the EU from both of them to take something of a side in that rivalry. And while we can have a real debate on the extent to which we will see sort of economic and technological decoupling between China and the US, in the report, I argued that we are slowly moving in this direction. The further we go there in that direction, the harder it will be for the EU to basically stay out of this. So while the current US administration doesn't pursue an overt strategy of economic decoupling like the Trump administration did, much of its policy does boil down to this. And it understands almost all policy, including domestic policy, in the context of China. And what President Biden refers to as the US's extreme competition with China, which I think, again, sort of stands in very stark contrast to the way that the EU approaches a lot of these issues, where it often actually sees a lot of these things as being set up in the context of competition with the US, so particularly sort of on the economic sovereignty front. We also know that both sides are willing to use economic coercion, including against the EU. So the US has threatened the EU at times with sanctions over its Nord Stream 2 gas pipeline, for instance, and there are still tariffs on certain European imports into the US. Meanwhile, China is moving further into a policy direction of economic self-sufficiency, and I think we'll hear more about that a bit later as well. But I think that kind of development is very difficult to really square with the kind of economic relationship sought by the Europeans. And as we've also seen recently, China is very clearly willing to push back strongly, using economic measures to what it sees as political interference in what should be a purely economic relationship, which is only set to become more of an issue as China and issues such as alleged human rights violations and the situation in Hong Kong, let alone Taiwan, remain very high up on the political agenda, even in Europe. So I think this is also where some of the internal divisions within the EU will come into play. The US, as I said, still has the lever of its security guarantee to put pressure on the EU, which is particularly powerful when aimed at the EU's eastern member states, which at the moment I think are too often, and I think incorrectly, simply described as the objects of a Chinese divide and rule strategy in Europe. So the EU might find itself in a position of having to balance not just between China and the US, but also have to balance basically domestic pressures to go in different directions put on by the two sides that is trying to triangulate in between. And so I think we'll discuss the EU-China investment agreement a bit more, a bit later as well. But I think this saga around it over the last sort of 6 months really highlights many of the challenges with the current EU strategy. So this was effectively an attempt to continue or expand even sort of the economic benefits that the EU reaps from engagement with China. And in doing so, this led to tensions with the US, with the Biden administration making very clear that they weren't happy with the agreement when it was announced late last year. And then a few months later, political divisions with China became very clear when the EU imposed sanctions on a number of individuals in China over alleged human rights violations. And in response, China put sanctions on a number of Europeans, including some of our think tank colleagues and some members of the European Parliament. And the Parliament responded with making very clear that they wouldn't ratify the agreement unless these sanctions were lifted. So the EU really got stuck there between the two sides. And that's not really an estimation of the agreement itself, which might be very valuable. It just shows that the risks that come with the strategy are so clear, and why, as long as you don't achieve the kind of objectives, at least the stated objectives that that they have set out with their economic sovereignty and strategic autonomy agendas, that I think this strategy is unsustainable over the medium to long term. So I think there's a million other things to discuss, but in the interest of time, I'll leave it at that. And I'm very curious to hear what my fellow panelists think. Thank you.
Fantastic. Thanks, Pepijn, for that overview of the paper and the argument. So, I guess in a nutshell, the risk is that China and the US in different ways pull or put pressure maybe on the EU, and it's unable to pursue this approach that you've been describing. But can you maybe, just before I turn to those to the other two panelists, could you just maybe sort of spell out how you see the difference between the American and the European approach to China? Because obviously, since Biden took over, there's been a lot of hope about a transatlantic approach. And some people point out that Europeans have become more skeptical. You touched on this, have become more skeptical of China in the last 5 years or so. So what exactly is the difference? Is it that Europeans look at this through an economic prism and Americans look at it through a security prism, or is it that the Americans are just more hawkish? You talked about extreme competition. Or is it something to do with the relationship between economic and security policy? What's the difference between the US and the EU approach?
I think that's slightly difficult to say, because I think it's not 100% clear what the US strategy is in this regard. President Biden talks about extreme competition, and they definitely see it sort of in basically all spheres of life. They see this competition with China, and that's a kind of competition that the Europeans just don't really see here. And I think that makes a huge difference, but it's not clear to me what the end goal, so to say, of the American strategy is in that regard. And I think that makes it really difficult. When it comes to sort of the transatlantic angle, I do think the fact that the US strategy, or however much there is, we can't speak of a strategy, but the sort of the US policy is so squarely aimed at China, while whatever the EU tends to do is aimed not just at China, but also very often against the US. The kind of economic insecurities I spoke about are just as much sort of projected onto its position relative to the US as they are relative to China. I think that makes it really difficult to really get on the same line there. And I think we saw that a couple of weeks ago, where we had a summit with a lot of grand talk of cooperation. And I would argue very little concrete, particularly when it came to China. There was a lot of stuff that you could see if you wanted to through the prism of cooperation on China, but it could also just not be that and be sort of a lot of grandiose words and no real action. So I think that's sort of those are some of the issues that still play in that relationship when it comes to China.
Yeah, very interesting about how European sovereignty is also partly aimed at the United States. When you think of, say, the Iran sanctions, it's part of what really galvanized that debate around European sovereignty. Yujie, over to you. How does, you obviously follow the Chinese thinking on this, more closely than anyone else on the panel. How do you think this is being perceived in China, and does the dilemma that Pepijn was outlining make sense from your perspective?
Well, thank you, Hans, and also thanks again, Pepijn, for your wonderful paper. I know how hard you've been working on this in the past year. So delighted to see many familiar faces on the call today. Hans, to answer your question, yes, I think China also take a mercantilist approach when they come to engage with European Union. That has not changed since China joined WTO from 2001. And as I said, the two sides are the largest trading partner towards each other. So that's just the trade figures. And what I'm interested in bringing here is that notion that China is buying up the Europe by putting investment. And it seems that notion would deserve more closer examination in here. And firstly, just to give you some data. At the moment, the Chinese investment in Europe is around 11.7 billion. Which is, considering the EU 27 economy is around 15 trillion euros. So the Chinese investment in Europe is very small in numbers. And also, if you compare it with United States and China in terms of investments in the European Union, actually United States having 15 times more than this Chinese figure, than this 11 billion euros compared with China. And also just in terms of employment, in terms of how much employment that Chinese investment have created within the EU that was in EU 27. By the end of last year, the total number is 300,000 made by the Chinese investment out of 200 million EU labor forces in total. So that sense, that slice of pie is relatively small. But I think the crucial essence, the crucial issue in here is that because China strikes as being a completely different political system and different regime in terms of governance and also in terms of economic practice, that really raised the alarm in Brussels as well as some of the capital, some of the member states, and which is fair in a way. But then on the other hand, is what we're expecting to see is we're going to expect to see a different China's economic strategy for itself in years to come. I mean, I hate myself keep bringing about this whole ideas of dual circulation that relies on domestic demand and supply, rebalancing the Chinese economy, but I'm afraid that is really the direction to travel in years to come for China itself in terms of managing its own economy. So when we come to dual circulation and what essentially the Chinese government look into, it is to look into a greater return on investment, irrespective is on infrastructure, irrespective it is on many other sectors. And what we have seen so far is a return on investment in Europe for many of the Chinese investment are not really big enough. So that would be one reason that the Chinese state capital would reduce in terms of investment in European Union. Now, secondly, and this is also to do with the capital control. Many of the headline numbers you have seen, many of the major mega deals you have seen in the past few years, I think it's from 2013, 2015 to 2016 onwards, partially because the Chinese authority has not really, didn't impose a very strict capital control towards those state-owned enterprises, which those state-owned enterprises are allowed to invest in different sectors. I mean, you can see that Chinese company investing in football clubs or various other, real estate, which is nothing to do with the core business of those state-owned enterprises at all. That's the way really just to get money out of the country. So again, after the Chinese authority introduced a very stringent capital control, and you see far less in terms of state investment and happening in Europe. So all this, that's another reason. So these are two factors of the Chinese state capital, state investment will reducing already. And then thirdly, this is the dual circulation. Even if we are talking about that China is very keen to invest abroad, but I would argue that most of those investment will be located within Asia Pacific. Partially, it is to do that China would like to secure its own supply chain, and China would be interested in strengthen its trading partner and investment partnerships with Asia Pacific economies because they have long-term established relations than compared with, for example, like Eastern European partners and so on and so forth. So that is a way to go forward for China. But I mean, this also leaves the opportunity for the European investment in China. Partially is because that the Chinese, especially the Chinese leadership recently was talking about switching its legitimacy from pursuing economic growth towards pursue a higher quality of life for the Chinese people, and which is to say sectors on healthcare, sectors on social welfare, sectors on education, which are allowed to be invested by the Europeans. And the Chinese are very much keen to keep the European investment money within China, not to go out of China. So there's a further reason that European investors could invest in China and further reasons to have this investment mechanism built up on both sides in order to secure some kind of a coordination, because this would also do the benefit for the European investors as well. Because at the moment, we seem to have no such investment mechanism in place and to guarantee the rights and also to guarantee the legal rights of those European investors too. So that's another element. Now, the third element is, I know many of the commentators and many of the think tankers have been talking about, by having the comprehensive investment on between China and the EU. That seems to be they're going to introduce the so-called examining the open examination on forced labor. I mean, the Chinese already agreed within the draft of CAI, so that would allow examining the 8 fundamental principles issued by International Labour Organization. But if we don't have this CAI to go forward, and that seems to be a lost opportunity for Europe as well, if they want to hold up China's human rights record. So three things. I think the real difficulties for European Union found itself nowadays, unlike in the time of Cold War, that be able to play a very grand game between Russia, between Soviet Union and United States, and now between China and United States, seems European Union feels so hopeless.
Thanks, Jay. And before I turn to Robert, can I just push you though on, because you described Chinese strategy as being largely sort of economically driven or commercially driven. And you said, actually that China is like the EU in the sense that it's mercantilist. I think what Pepijn meant by that term was that it's pursuing economic objectives rather than strategic objectives, is one way of thinking about that. Are you really saying that you think that's how Chinese, how China approaches Europe? I mean, is it not the case that this is actually much more strategic than that? And in particular, when Pepijn talked about, this situation where the EU would sort of triangulate between China and the United States rather than being aligned with the United States, is this not the overriding Chinese objective in relation to the EU? Is to pull the EU away from the United States so that you don't have a united West that's confronting China?
Well, Hans, I think it's a mixed bag. I mean, we can't deny the fact that there's a sense of economic statecraft being practiced by Beijing, that by using its economic resources to extend its political influence. But the problem is that within EU27, the bilateral relationship between China and various capitals are very different in terms of nature, in terms of connection. So it's very hard to give a firm conclusion that what China is aiming to do, and especially what are those Chinese investment aiming to do. It is to do with the overall overarching ambition of the Chinese government, of the Chinese leadership. I mean, for example, what is really the strategy of investing AC Milan Football Club by a Chinese railway company? Does that really construed as being part of the geopolitical ambition itself? I'm not sure. So I think it's really a mixed bag in here. Yes, you do have some Chinese-owned enterprises invested in Greece, for example, in Pegasus port. It is for the strategic ambition. But then on the other hand, there are many other commercial deals happen at the same time.
I think a lot of people would say that the strategic rationale for buying a football club is that you then make China more popular in those countries with ordinary people, and that then in turn enables you to as I say, pull Europe away from the United States. I mean, presumably you would accept there is a strategic component to this. It's not purely commercial.
Well, as I said, I mean, it's a mixed measure. It's a mixed measure and depends on which country you choose to. And also, I think the Chinese facing incredible difficulties in here is that how China is going to coexist with that country has with many countries that have close economic ties, but politically so far apart. I think that's really the challenge for China to go forward.
And presumably different actors in China look at this in different ways as well, right? So the PLA looks at this in a different way than than MOFCOM does or whatever, right?
Of course, yeah. MOFCOMs and various other, and also the state supervision department, which supervising state assets and how much money they actually allow to lending those Chinese companies to invest in Europe. And they are now bring different standards of lending criteria too.
Great. Robert, over to you. How does this look from your perspective?
Yeah, hi. Thank you very much for the invitation, first of all, and great paper, Pep. I really enjoyed reading it. So I will try to play the devil's advocate here and try to contradict you a little bit, not because I want to criticize your work, but to live in the debate a little bit. Okay, so first of all, I would say the EU strategy is a bit more sustainable than you argue. First of all, I think you have two challenges identified in your paper. The first one is a geopolitical challenge, and the second one is a trade and investment challenge, I would argue, so slightly more technical. On the geopolitical challenge, that's not really my cup of tea, so to say. I'm more a trade and investment expert. But on geopolitics, I would like to remind that the EU and notably France, Germany, Italy have always basically played an intermediate role between the US and the Soviet Union, for instance, and have always been doing fairly well actually with that, right? And so in that sense, I think playing this intermediate role is not necessarily something bad. The EU has a lot of experience with it and may work out well. That being said, I don't think actually the EU could play any other role because, as Jay also rightly pointed out, there is this agreement within the EU. So actually going for the US approach, a hardcore approach, very strong line vis-a-vis Beijing, I think that simply won't work from an EU perspective. Now turning to the trade investment stuff, I think here also it looks a bit more sustainable than perhaps one may think at first sight. You discuss quite a bit in your paper the CAI, the Comprehensive Agreement on Investment, and the FDI screening mechanism. So the CAI, first of all, it is important to note, it is not a trade agreement. It is not something that really unlocks foreign markets and creates a lot of new business opportunities. And it was never meant to be like this. China actually approached the European Union about 10 years ago and wanted an FTA, and the EU said, no, we have already a trade imbalance with you. We don't want an FTA. If anything, we will have an investment agreement that perhaps also tries to unlock the service sector in China to rebalance a little bit the situation, and notably also tries to improve the situation for European investors in China. So it is an investment agreement. It is, however, a highly unique and very uncommon investment agreement. It does not have, for instance, investor-to-state dispute settlement. It has not the classic investment protection provisions. It really tries to lock China into a commitment to treating European, but generally foreign investors better and not to discriminate, maybe openly or hiddenly, basically. And it also tries to create a number of political fora to discuss economic, political, but also human rights challenges, for instance. So basically, this agreement is not so much about the economic, the business opportunities. It's really about creating a level playing field or committing China to certain ground rules. It's a political dialogue. And I would say the very same actually goes for the FDI screening mechanism here. The idea, it's not, let's put it like this, it's not a coincidence that actually the EU negotiated CAI and at the same time implemented this new mechanism. It is about signaling to China, if you guys don't come around, if you guys don't take our concerns seriously, we may actually restrict foreign direct investment. And what this mechanism does, it basically obliges member states to create FDI screening mechanisms on the grounds of national security, and then to create a forum for member states to exchange their opinions on this stuff, and eventually to ban foreign investment projects or to condition them, right? But this is also not a very strong mechanism. It's a coordination mechanism. In the end of the day, it will be with the individual member states. But one thing you don't mention so much in your paper, you pass by it basically at some point, is this new white paper on foreign subsidies. And I think this is a very potent tool that the European Commission is preparing right now. It is based on competition policy, on state aid policy, so a very strong competence basis for the European Union. There, the EU has always been acting very strong. If you talk about the Brussels effect that these days in competition policy, it is very strongly present. It's really a superpower. What is it about? Basically, the EU, that means Brussels and the member states have realized that there is distortion in the single market because foreign firms, namely Chinese firms, create factories or entities in Europe. They get cross subsidies from China and thereby may outcompete European firms in the single market, right? So you don't have anti-dumping, you don't have countervailing duties, you don't import the distortion. The distortion arises in the single market through cross subsidization within business structures. That is a real issue. The second issue that the EU has identified is that actually many Chinese firms manage to buy all these European firms through mergers and acquisitions, because also they get tax breaks, they get access to beneficial loans, etc., etc. So the EU wants to crack down on this and wants to crack down on it from a competition policy basis. And I think if I was an EU and a Chinese policymaker, I would be looking at this very carefully, because that is really, the message here is really, okay, Europe has its problems with the political economy of China. We are talking about this for a long time now. If you don't come around, if you don't endorse more Western market-based approaches to governing your economy, then we will start using our competition policy against you. And this, I think, will really work. So to sum up, I think it's much more sustainable than you think, geopolitically, but also economically. The EU is more powerful, but it tries to have a dialogue, but also to create instruments to push back on China a little bit. Yeah. All right, thanks.
That's great, Robert, and I'm glad you did challenge the argument. Can I just, and I'll give Pepijn a chance to respond to some of the points you made in a second, but before I do that, can I just push you on, this rather optimistic scenario, if this approach is sustainable, and what would that look like? So, you made this comparison with the Cold War. And you're clearly right that there was a certain attempt by France and West Germany at that time to sort of play a bit of a mediating role. But there's some big differences, and one is that, particularly in terms of the economic relationship, right? So there there were gas pipeline deals between West Germany, and the Soviet Union, but there wasn't this degree of economic dependence, and in particular, the economic dependence that Pepijn talked about of German exporters. I mean, some extraordinary figures about particular companies and particular sectors of the economy, like the automotive sector and so on. So in your sustainable, if this is sustainable, what does that look like? Is it the kind of is there kind of a decoupling that makes it sustainable? And what Jay was talking about as well with the Chinese, the shift in the Chinese approach might sort of push it in that direction. Or is what you're talking about ongoing, very close economic relationship between the EU and China that's still sustainable?
Well, I guess my understanding is a little bit that the EU will try to implement the strategic autonomy over the next 10 years or so, but this will actually play out over the long run, right? You cannot create all this industrial capacity and rewind your supply chains overnight. So this will take some time. So I think there will be at least not a further intensification of economic relations between Germany and China for a number of reasons, really. But I also think that this idea of decoupling that is very prominent with certain parts of the US establishment, but also I think in the UK with certain people, that really doesn't have any support, I think, among the policymakers in Berlin and Paris and Rome, etc. So I think there will be a continuous intermediate relationship, let's put it like this. And I would also challenge you on the point that the Soviet Union-German relationship were perhaps not as intense as nowadays China. If you think about it, West Germany was incredibly dependent on energy resources from Russia, right? I mean, that is really going to the heart of national security. So I think it is somewhat comparable in that sense. Anyway, it's a big topic.
Interesting, yes. Pepijn, do you want to respond before we open it up for some questions? Do you want to respond particularly to some of what Robert has said?
Yeah, maybe very quickly. I think some really good points, and I think he's right to point out that the EU is moving into a sort of slightly stronger direction in terms of its policy response. And you're right to say that I pay very little attention to that, and that's partly because it came very recently. And I know that this is an area that, in terms of the foreign subsidies, that the EU has been looking at for years now, and has really struggled with to do something with sort of within its own framework, so that there is something on the table now. I think will make a difference. I think fundamentally, sort of the difference in view comes, I think, from a difference in what you sort of how you expect the world to evolve, and I think that's separate for me from the question of should we have decoupling. I think the question will be more, will there be decoupling? And I think part of what we just heard in terms of where China is going as well, Europe might be getting stronger in terms of its investment screening, its combating distortions of the single market, but that becomes a lot less relevant the moment that, which I would argue has already happened, Chinese investors become a lot less interested in Europe. And we've already seen that in recent years. You just need to look at sort of the FDI figures, and that we saw sort of that massive bump about sort of 5 years ago, and that has already sort of come down. And then there's all sorts of structural factors, particularly also I think in the technology sphere, which are driving this. And so Europe can then decide that it doesn't like decoupling. And I could personally say that I don't like the idea of decoupling. I think there are really strong forces pushing in that direction, from both the US and from the Chinese side. And so then it'll just become harder and harder to triangulate between the two. Yeah,
Robert, you might want to come back on that later on, but maybe let's first of all take a few questions. So the first one is for you, Jay, and this is about again sort of Chinese perceptions, but specifically Chinese perceptions of CAI. And this is something I've been very sort of curious about as well, like what exactly happened on the Chinese side, because it is a little puzzling. So the question that Krista asks is how important for China is the ratification of the CAI? Did the Chinese authorities understand the pushback their actions against MEPs would have in terms of ratification? And did the Chinese authorities miscalculate? And how can they correct their mistake without losing face? As I say, that's something I've been quite puzzled about too. Did they not realize that this would kill off the CAI, and did that matter to them or not?
I think the straight answer is perhaps the Chinese already calculated that risk before imposing the anti-sanction measures. We're talking about, return on investment. We're talking about the European investment in China, how much real benefit that could bring to the Chinese GDP and to the Chinese economy. It is all in the relative term, it's all in opportunity cost. So perhaps the Chinese feel that sense, perhaps the regime legitimacy, that sense of value to show that sense of to present the Chinese government value perhaps is more important to defend itself rather than just having this CAI for itself. I mean, obviously having CAI, it is a political win for China to have it, but when it comes to real economic benefit and how much real economic benefit that could bring to the Chinese economy, which is so much rely on Asian Pacific economy, which so much rely on its domestic market, perhaps very little. So I think that really gives the Chinese government the audacity to put forward to. In terms of correction, in terms of course correction, I doubt it will be in the short term, and perhaps will happen sometimes around next cabinet reshuffle in the year after.
But this is again, though, where I come back to the sort of strategic part of Chinese thinking, because in effect, they have pushed the EU slightly closer to the US through this, haven't they? And was that presumably is kind of an important thing, as well as the economic cost benefit analysis, no?
Well, of course, I mean, this push the EU and United States even closer. But I think the Chinese decision maker also quite clear that the United States and EU really see each other eyes to eyes in terms of normative values, and by no way that China could dealt with the EU as close as the United States. I think they just admit that they give up on that point now. Okay.
The next question, I guess probably more for Pepijn and Robert. China, this is from James Tudor White. China's economy is expected to slow down in the second quarter by almost half. EU policy towards China has largely been trade-driven. Could a slowdown in China's economic growth create a security and geostrategic shift of the EU towards the US whilst this opportunity presents itself?
Sure. Yeah, I think that's a really interesting question. Maybe not so much in the short term, but like in the longer term. So the big question is sort of how much potential is there within the Chinese market, basically for what I've been talking about before, for European investors and European companies to profit from the growth there. And I think that outlook is still relatively positive in terms of, if you look at sort of the relative expected growth compared with, for instance, the US, that's still a lot higher in China. So I think that the question is, of course, what's your outlook sort of medium to long term for the Chinese economy? And, you know, a lot of people have probably already lost a lot of money and credibility on betting against that for all sorts of reasons. And, you know, the Chinese housing bubble will collapse anytime soon. That's always a bad bet to make, I would argue. But I do think there's real questions over how much potential there will be. Not enough, though, to really shift attitudes at the moment. And, you know, you see that in every single survey of businesses, not just in Europe, but also in the US. We also see sort of, you know, US financials are incredibly keen to get deeper into China. And every time businesses are asked, they see all sorts of opportunities there. So I think that's going to continue for quite some time.
And German companies in particular seem to be doubling down, if anything, on production in China. I don't know if, Robert, you want to add anything about that, but let me throw another question your way as well at the same time, which is from Michael Schroeder, or perhaps Michael Schroeder. What are the prospects for the EU's new and planned tools to counter Chinese state capitalism, like the investment screening framework or the IPI, and how likely will they be applied in a significant manner given their limitations?
Okay, thanks. Big questions. I think perhaps on the first one, I would also like to highlight that the US and the European economy are integrated in a slightly different way than the Chinese and the European economy, right? So there are slightly different business activities, investment patterns, etc., going on here, without going into too much detail. So if China slows down, it's not like that it will just replace China with the US. The US has a different role for European businesses, and the European market has a different role for US businesses than Chinese firms and Chinese market. That being said, on that, perhaps also one thing I wanted to add on the investment slowing down in Europe. I wouldn't be so sure about that. If you think about the Belt and Road Initiative, from an economic perspective, what's really happening here is that China has been accumulating over decades enormous capital reserves. And it really struggles to keep its exchange rate low because it's just sitting on so much money, basically. So it really tries to push out capital out of its economy. Also, because actually the returns on investments are higher outside. That may be higher still even in Eastern Asia than in Europe, for instance. But basically, China wants to get rid of capital. That's to some extent what we are observing here. So just as a little side note. Now, on the last question, how effective are these instruments that Europe has been designing and implementing over the last years? Let's see, as I said, the CAI, the Comprehensive Agreement on Investment, is essentially the attempt to create a stable dialogue platform with China, to commit China to certain economic values, which are not enshrined in the WTO agreement. So it's really trying to basically push the debate forward and make China commit. So that may be helpful, it may not be helpful, but the ultimate question is really what can you actually do as Europe or as the US to make China endorse a more market-based political economy? Not a lot, really, right? I mean, it's a huge economy, it's a huge market. They have their own traditions, they have their own governance system. You cannot just expect them to turn around and say, okay, now we are basically a US-like economy, right? So the question is not whether they will be effective, the question is how much can Europe and the US address their problems in China, namely the discrimination against European firms, against US firms, etc. And I think there the instruments may be quite effective. Notably, this foreign subsidy mechanism that may really help to put some pressure on China to become a bit more friendly towards European and US companies, for instance. Sorry, it's a huge topic. I can say many things about it. But
no, that's great. And I'm glad you brought up BRI because there was a question about that. I'm not sure which of the three of you would like to have a go at this, but the question is, how does the EU view BRI? Is it a strategic threat to Western interests and a projection of Chinese interests outside the Indo-Pacific? This is in light of China approaching the EU to cooperate with China on the BRI. In terms of governance standards and environmental and social impact, there is no congruence between EU policy and China's investment in Africa.
I can give a go for this one. BRI, okay. I think what China is trying to do in here is trying to introduce some kind of different standards in terms of development assistance and development lending, which is very different from the Washington consensus-based in terms of foreign direct assistance. I think that really alarmed the European Union. They felt somehow the so-called golden standard has now been challenged by China. And then that's why the EU always found rather timid when they come to talk about the BRI in the past few years. And now you have the so-called B3W, Build Back Better World. But while we're talking about B3W, what the EU really need, it is just in terms of capacity to be able to attract private investors and investing in those areas in terms of infrastructure. I mean, the private sector is not even invested in within Europe or within the UK in terms of infrastructure, and let alone investing in many of the developing countries. And actually, China would feel even happier while having the B3W and BRI at the same time. And partially because also the Chinese itself found difficulties in terms of attracting private capital to cash in on those infrastructure investments. So why not?
So you don't see any kind of real conflict there?
I see the real conflicts is the conflicts of standard, because it's about, who established the standards in terms of lending criteria, in terms of the societal side of the lending criteria, and also in terms of good governance and all those values that European Union embodied in years to come. I think it's really the clash on standards when they come to lending.
So, but again, you don't see this as being particularly strategic from a Chinese perspective. You see it more in economic terms. I would really see it in a more economic term. But then obviously, if we're talking about could really EU be a meaningful player in the Indo-Pacific, I have some question mark. Because for many years that European Union have been talking itself as being an economic giant and political dwarf. And do I need to see the last sentence? Military, something else. Right, but it's not just Europeans, but also, I mean, lots of people in Asia see BRI much more as a strategic project rather than an economic one. in India and so on?
I think depends on country, on which country you talk to. I mean, if you're talking about Pakistan, yes, they absolutely see this as being both security as well as the economic guarantor. But when they come to countries like, for example, Malaysia, they completely saying this is a total waste of money by the previous government being given to Beijing. So again, different countries see it very differently. The problem is if the ECB and EIB has a very stringent lending criteria to the member states, and then member states were more likely to follow the EU rule rather than the Chinese rule and borrow money from somewhere. I mean, just look at what happened in Italy. After 2 years of signing the MOU with China, and nothing really happened on the ground. Partially it's because the member states are more likely to follow the EU rule rather than the Chinese rule.
Pepijn, I don't know if you want to add anything on the EU and BRI, and in particular this new alternative that the EU has come up with, which I think you're a little bit skeptical about.
Yeah, so I think the EU does see this as strategic. So it does see the BRI as strategic, and I think some of the member states have done as well, and not just sort of within the sort of geopolitical context of it, but also within the European context of it. So I think that the Italian BRI MOU is better understood as something sort of that plays into internal EU debates than necessarily Italy seeking out investment from China, because Italy definitely needs more investment also in its infrastructure, but there's more than enough capital available in Europe. So that's not really what they're playing at there. So I do think it's the EU definitely sees it as sort of strategic, and yeah, so you rightly point to its connectivity strategy, something which the Council gave another push on I guess yesterday, and that I think that does show sort of the EU trying to play a bit of a strategic role. But I would then add sort of the same question that I spoke about before, which is where are the resources behind it then? So these conclusions talk a lot about crowding in private investment, which is definitely part of it, and it's also part of what happens under BRI. But it doesn't say, okay, we're definitely going to be putting money behind this ourselves, and we're definitely going to be doing something here. So the kind of countries that you're targeting, to put it slightly bluntly, they're not stupid. They also understand that, you know, one side is coming with money and arguably fewer conditions, or more lenient conditions, and the other is looking to crowd in private investment in some way. So I think that's sort of, again, sort of the EU just not really doing what is necessary to play that game. That whether the Chinese are doing it or not, from a strategic perspective, a lot of the countries involved do see it as.
My colleague Richard Whitman asked a great question about to what extent the EU's approach on China might change after the German election and the French presidential election. Maybe Robert, shall we start with you on whether you think Germany's approach to China might change after September?
It's a really interesting question, and actually, I think Armin Laschet, basically the CDU candidate for chancellorship, said the other day that he thinks that Europe has to talk to everybody in the room, also China, and there's no reason to take a radical position as the Trump administration has done. So he very clearly actually signaled that he wanted to follow in the footsteps of German foreign economic policy vis-a-vis the Soviet Union, or what also Germany has been doing with China over the last decades, and basically have a good dialogue and maintain a respectful relationship with them, really. I think about France, it's a bit the question mark, right? Who will win, whether it will be potentially even Marine Le Pen, or whether Macron will have a second tour. I think in both cases, you would probably expect actually fairly good relationships, so like at least a strong interest of France in good relationship with China, right? Probably even more with Marine Le Pen at the head.
Fine.
Yeah, no, I completely agree with that. Laschet is the continuity candidate for the CDU. increasingly likely to be the next chancellor. And then the big question becomes, would his coalition partner really push for a much stronger line towards China? And whoever that will be, whether that will be the Greens or some sort of larger coalition, I suspect they'll have other priorities. And then, of course, there's the fact that once you get into office in Berlin, I think anybody who goes in there is then sort of confronted with the interests throughout Germany. So that's when even if they would want to go in that direction, the German car makers didn't come to bail out the Brits, but they will definitely come to Berlin to discuss China. So I think that I wouldn't expect a really big difference there. That is driven by fundamental sort of interests in Germany, that policy.
Robert, do you agree on the Greens? Because I have the impression that a lot of people, especially Americans, have invested a lot of hope in the Greens on China policy.
Yeah, I mean, it's interesting. I mean, I think the Greens have definitely a much more value-based approach. At least that's what they are doing right now. I agree with Pep that, once you enter the chancellery in Berlin, the world may look quite different from when you're in opposition. So I think there will be the two things happening. But I think the Greens are definitely much more focused on human rights. It's really part of their core agenda, really. But let's see whether they actually will become the strongest party or not, right?
So one thing that hasn't come up so far is climate change. And I think this is probably an important issue to touch on. And this slightly gives us an opportunity to do it, because the other thing about the Greens is, even if they are sort of a bit more hawkish on questions around values, obviously for them, climate change is an even more important issue than it is for the Christian Democrats or the Social Democrats. So, it always struck me that would probably also at the same time push them in the direction of cooperation with China to an even greater extent than the other parties. Do any of you want to comment on that, or more broadly on the question of where does climate change fit into everything that we've been discussing and what you've been arguing, Pepijn, about how the EU's China approach is unsustainable? What's the role of climate change in that, given that that's obviously a European priority?
Yes, I don't really mention that in the paper, which is surprising given sort of the size and the importance of the issue. Also particularly in Europe. And you do hear that a lot. So also coming from a lot of European leaders, definitely not just from the Greens, that to tackle climate change, it's really important to continue to cooperate with China. I think, so my personal view on that is that's, I think, a really interesting debate to have, to put it slightly, very crudely. I'm not 100% sure about that, because at the end of the day, Europe needs to reduce its emissions. China needs to reduce its emissions. And the way that we cooperate in that, I'm not really sure, unless sort of it's about setting up global mechanisms to hold each other to account in terms of achieving this. The question is, to what degree would they function? And would we really be able to, or willing, again, in terms of the European case, to inflict the hurt that would be needed also on ourselves, probably, to hold others to account to their commitments in that space. So I think that it's of such importance that we'll sort of continue creeping into these debates. But I think often it distorts more than it really enlightens.
Robert or Jay, any final thoughts on that, or anything else for that matter?
I mean, perhaps it seems to be a cliche that the climate change, it seems to be there's no fundamental conflicts between China and EU on this, and that has ever been since, I think, in the early 2000s. So it's one of those areas and two sides can really closely cooperate with each other. But again, I think the important thing in here is about establishing proper standards when it comes to carbon reduction, when it comes to using the utilization of renewable energy. So EU and China, if they want to start to repair their partnerships, and perhaps could start with those baby steps. There is surely competition, though, and potential conflict around, individual industrial sectors, no? Of course, yeah. I mean, surely there's a competition when it comes to renewable energy. And surely, I mean, if China is, again, introducing the so-called dual circulation, part of external circulation is to export higher value renewable energy equipment as well. So there's also a sense of competition between China and the EU as well. But I mean, overall, the one way to judging the Chinese foreign policy, it is how much is in line with China's domestic economic policy, but obviously green is very much high on the agenda. So I think the common interest would be much bigger than the difference.
All right, I'm afraid we are out of time. But as Pepijn mentioned, this is part of an ongoing project that we're doing on transatlantic cooperation on China and the Indo-Pacific. So we will be having more of these discussions around all of the different aspects of this that we've touched on but haven't been able to go into more depth on. In the meantime, do read Pepijn's paper, which is excellent. And we look forward to seeing you next time. Thank you very much to our three speakers, and thank you all for coming, and have a great rest of the day.